standing here right now with Steve Kroll from Monness Crespi Hardt. He has been, what would you say, a cautious bull, a realistic bull, and we have done pretty well here. But you think now we're sort of topping out? Do you think 1,400 is unrealistic on the S&P?
I think 14 is probably a little excessive. I think today might have been a little bit of blow off. Getting back to the real thing, we're bullish. We just think that there are some macro problems out there that will limit the upside. 2 months ago, everyone has despair. Now things are very bullish. The bull to bear ratio now is hugely in favor of the bulls. So I think too much optimism is short term in the market. Longer term, we're going higher, and I think there are plenty of stocks out there to buy, just to rather buy them on pullback. Yes, Carol.
But Steve, sorry, I know I'm chomping here at the bit. I mean, the macro picture, not so great. We know that, but I keep hearing over and over and over again. You take a look at the micro picture of a lot of names, and they look great going into earnings season and so on. So why not be more optimistic here?
Well, I think now that the market's had a 10% rally in 2 weeks, there's a time that I think we should pull back. The macro issues come up probably every month, and they haven't gone away. Greece hasn't gone away. Portugal hasn't gone away. Our debt ceiling problems haven't gone away. But right now, we've gone from maximum bearish to maximum positive for the moment. So I'd rather buy them on a pullback. I would have liked to sell them. I didn't think the rally the last 2 days was going to go as far as it went. But having said that, I think that probably a great time to raise some cash in the next day or two and look for a more opportune time, especially the stocks that have not moved.
Hey, listen, we did talk to one of the big bulls out there. We're talking about Laszlo Borini. Steve, I want you to listen up to this.
We think there's still more to come. You still haven't gotten to the point where people are really positive. We still haven't gotten to the point, as I like to tell people, when my phone doesn't stop ringing. We read so many negative stories, and I'm waiting for when we see a positive story on the cover of Bloomberg Business Week, and then I'll start to worry a little bit.
So, Steve, Laszlo says, you know, when he sees a big positive story on the cover of Bloomberg Business Week, that's when he's going to get worried. He says there's still so many negative stories out there, negative sentiment, that this helps, you know, give him his optimism on the market. It seems like a pretty good argument, and he's had some really good calls.
Well, I don't disagree with what Laszlo said. The only thing I'm saying is that 10 percentage points in 3.5 weeks is something that you may want to reconsider short term. Longer term, we're very bullish. As I said, we're bullish and we're realistic. Trees don't grow to the sky tomorrow. We may be on here another couple of weeks and the market may be lower as another macro thing unfolds over in Europe or wherever.
You think we're basically trading in a range from now till at least the end of summer? Still, there are stocks that you like, and the farm stocks are those that you've done well on in the past and you like them again. Why?
We've liked the farm agricultural names for a long time. We have a great analyst, Chris Shaw, that's picked the group very well. In addition to that, we have Microsoft, we have Mattel.
Hang on, Microsoft. This is a new one, and it's been a dog, right? Everybody who's come on with me and Carol over the last, 10 years that likes Microsoft hasn't made any money.
Well, we had an idea dinner about a couple of months ago, and Kevin Rendino, a good friend of mine and client at BlackRock, outlined the case on Microsoft. Subsequent, Bill Miller at Legg Mason told me some of the stuff on Microsoft. So we looked at it. I happen to think that now that IBM has had a tremendous run, maybe that will pause and Microsoft will take the lead going forward. The numbers there are good and the cash flow is good. And the Skype acquisition, everyone poo-pooed it at first. All of a sudden, 2 weeks later, it's now going to be part of Facebook. So I think a lot of old money that has been sitting there waiting for Microsoft to move is going to see it.
Sounds like you got to be patient. Sounds like you got to be patient here at Microsoft. Sheila, let's bring you in because you're looking more closely at Microsoft.
Yeah, look, I mean, this is a name that everyone loves to hate. It has its lovers, has those haters here. Here's the problem with the stock. If you've been a long-time holder of Microsoft, you have been on the losing end. In fact, over the past 10 years, shares have been down about 20%. Yes, over the past year, it's done a little bit better, but basically, it has been underperforming the market. So both the broader market, also the tech sector, Microsoft has been a laggard. Now, the big problem with Microsoft as well is future growth. Where is it going to come from? I mean, consensus basically is that Microsoft has dropped the ball when it comes to the consumer side of technology. Yes, Skype is this big $8 billion attempt to change that, but the jury is still out. So, Steve, my question to you is, what attracts you so much to Microsoft? Is it just because it's cheap and it has cash flow, or do you really think those growth prospects are out there?
Well, I think you really answered my statement. The company has plenty of cash flow. It has underperformed for 10 years, and now I think that's about to change. The last couple of quarters have not been that bad for the company. the street perception was negative, but that is changing. So I thank you for answering my question.
Spinning off $1 billion in free cash flow a month. That's not bad, right?
That's not bad at all.
What about Mattel? That's another new name I see here. Do they make Barbie? Does Mattel make Barbie?
That part I wouldn't know, but
Carol?
Yes, of course Mattel makes Barbie.
And other toys as well.
Yes.
Our analyst, Jim Chartier, says that he thinks the quarter coming out next week is going to be a much better quarter than the street expects. We have it on our buy list, and we think the stock's very, very compelling here.
How about Jeremy's calls? I got to ask you about housing. Your housing analyst, Jeremy, a good friend to everyone here. So what does he say? What does he like? Or is housing doomed to another couple of quarters in the doldrums?
Well, Jeremy was promoted to sales, or however you look at it. But housing is definitely recovering.
He got out of housing. It was so bad that Jeremy split from housing.
Actually, some of the housing calls have been great. The housing stocks, it's a long-term turning situation. We talked about Lennar probably a year ago. The stock was at 10. It's now up to 19 or 20. Housing is taking its time, obviously, to recover. But a lot of the stocks like Pulte, which we had to buy on the name, all these things are starting to recover slowly. Rates are low. The high end and the middle end consumer is buying houses. If you check with your realtor, it's just the low end that lost the tax credit that's slow to recover, which is understandable in an environment where the economy is slow to recover. But you saw the numbers today on the jobs. Tomorrow number probably be good, and things are starting to continue to recover.
You know, one area, guys, where investors have definitely been backing off, and that's commodities. Adam, let's bring you into this because we did see a big surge in commodity trading today, but that's not been the trend as of late.
No, it hasn't been a huge surge. As a matter of fact, got an email from our man Dave Stroud. Dave's the guy we went to China with, TS Capital. He said, take a look at the volumes, and I want to show you because they're pretty staggering, Carol. The increase in volumes of the commodities today versus the 3-month average. I'm going to just read them out to you. You ready? 312% increase for natural gas. For sugar futures, 233%. Rice, 192%. Coffee, I could go on and on and on. There they are. Take a look at some of these numbers. Pretty dramatic. So, Steve, the question is, I know you love commodities. I like commodities, too. They're tangible. You can touch them. What's the trade? What is the commodity trade right now? Because I know there are a couple of names in position for you.
Well, we've continued to like the farm stocks. On the energy stocks, we have a list of about 32 of them. The only thing I'm short-term a little worried about, even though crude was up again today, is that the Saudis are really pumping a lot of oil, almost 1 million to 2 million barrels extra a day. So we should put the cap on some of the commodity stocks, particularly the oil stocks, short-term. As I said, we have a number of them on the buy list. I think the airlines will benefit from lower crude prices or somewhat lower crude prices over the next couple months because fares are up and they're making money and charging you an arm and a leg to do anything.
And Steve, you did mention you like Bunge. Jules, let's bring you in. I mean, anything to do with ag has been doing what? Really, really well here.
Really well. Bunge's up, Deere is up, which is another stock that Steve likes. And the stocks have seen a little bit of chink in the armor recently, a little bit of a downtick, as you can see there, for the year to date, as we have seen these commodities pull back, but then they've recovered once again. Deere is another example where we've seen sort of a similar trajectory here, where it's gone down and then come back up a little bit. So, Steve, I'm curious what you do see on the agricultural side of the equation. We did just get recently a USDA report saying that farmers were planting more corn acreage than had been expected. Is that something that's going to be good for these guys in the long run?
I'm a little suspect of that report. In my little token, looking at some of the farmland when we travel around the country, I got to tell you, the stalks are about half as high as they should be. So I'm a little suspect of that report, number one. Number two, it's going to take almost another year to replenish the stocks. Stocks are still at all-time lows right now. So even if they have a couple of million acres more, I think that we're going to be short of most of the farm commodities for the next year or two. So I still bullish on that whole group.
All right, hey, Steve, thanks so much for joining us. Steve Kroll coming down with me on the floor of the New York Stock Exchange from Monness Crespi Hardt. We take a